Welcome back to the podcast, guys. Today we've got the legendary Tony Lopes from Dirty Boots Capital. He's going to tell us a little bit more about how to develop a lifestyle through real estate that frees up your time. His ideas or ways of going through creating income and how to replace what your working life with a life that creates some freedom for you is legendary. He's done this for lots of people. It's exciting to have him on the podcast. Tony, welcome to the show.
Anthony, thank you so much for having me here. We're going to have a load of fun today.
You know, as we start to look at, today's modern world, everybody's hectic. And it's hard to figure out, all right, look, I want to get into real estate, but it feels like this insurmountable mountaintop to get over. And, if you're a young entrepreneur or if you're a young person getting started or, what are the ideas that we want to do to start thinking about where do we want to start?
So there's a lot of different ideas, and virtually everyone that I meet with through my coaching platform, they just want to achieve more, whether it's more time, more health, more wealth, whatever. It's always, I want to achieve more in my life. And it's not, I want to achieve more real estate or any real estate because I want to create a second job for myself, because that can easily be done. I see that done by a lot of folks who buy real estate, who are doing it poorly, who end up having a second job, fielding phone calls from tenants and dealing with issues, insurance companies, and so on, right? So we don't want that for folks. We want people to achieve more. And I know it's difficult to get started, especially today. It's not like it was 20 years ago when I got started, that's for sure. So one of the things I share with folks is the number one thing is if you're light on capital, which I get these days. We've been in the last 3 years of the highest inflation we've seen in our lifetimes. So one of the things I share, especially with young people, because I love helping young people, I love it, right, is house hacking, right? Be able to buy, even if it's a condo, a 2-bedroom, a 3-bedroom condo, where they can move in themselves, right? A lot of young people want to move out of their parents' house, which is, I respect that, right? Buy a condo, 2 or 3 bedrooms, and then rent that second bedroom and that third bedroom to start creating some cash flow. During that time, maybe do some improvements on that condo. Paint the walls a modern color, replace the carpet with some nice, vinyl plank flooring to give it an updated look, replace maybe some vanities or, just do some minor upgrades to be able to create some value, some equity for yourselves. That's a very easy way to get started as a young person with low capital.
Well, I think a lot of people, and I certainly have looked back over my investment career, and I can tell you that at first it seems like this insurmountable hill to climb. But like some of the first properties I ever bought were literally I remember buying a property for $900 down. I bought it. It was a junk, a bad neighborhood. There was the people that were lived in it before had a fire in the living room. When you walked into the living room, every wall was burnt and there was a hole going, you could see the sky in the living room. And I bought it for $900. Like literally it was $900, a tax sale. Nobody else wanted to buy it. It was a little bit of a rough neighborhood. It wasn't that rough. It wasn't so rough where I was scared to live there, but it was one of those ones where I had to go in. And at the time, you can imagine I'm really young then. And, my parents helped me out there. I was, a little bit broke, but for $900, they gave me that. And we spent $7,000 over the next couple of months fixing it up, and like stuff that I didn't even know how to do. Like I remember I learned how to do roofing in that house, right? I went to the hardware store, the 84 lumber, and I sat there with the guy and I'm like, how do you do this roofing? And I got up there and I put the first roof on and I fixed it and it didn't work. It leaked. Right. Yeah. And it was a mess. Tony, it was like a mess. And, but then I went back and he was like, well, you didn't do it. You need to go under the thing. So I went back up there and we ended up doing the whole side. I realized it wasn't that bad. Maybe it was like a $300 or $400 mistake at the time. And it probably cost me overall, maybe that whole thing was $700. Right.
I love that. I love that story, Anthony. And here's why I love it and why I encourage young people and even folks who are just starting out, to maybe do some house hacking and buy not that that A plus property on the street, buy something that maybe needs some work. Over my 20 years of doing this, and you as well, Anthony, you gain this awesome experience
That's right.
in a lot of different ways, working with tenants, working with contractors, insurance companies, whatnot. I do consulting now. I consult with folks who have, asset managers who have hundreds of properties. And I go in and I walk properties and I talk to their property managers, and I'm talking about, in this case, roofing, how to do roofing, how to do the drip edge and whatnot. And I have my clients look at me and they're like, you know how to do roofing? Yeah, because that's how I started out. You know how to deal with tenants. You know these different, ways to renew a lease and bump up rents every time you renew a lease. Yeah, because I've been doing this, and that's, I've been hands-on. I call myself Dirty Boots Capital because I've literally gotten my boots dirty so many different ways. So I love that perspective that you share, Anthony, because doing it gives you such valuable experience going into the future, so that when you get out of doing it yourself and you're just talking to the contractors, you have more upstairs on how to relate to them and how to talk to them about doing the work, and knowing whether you're going to get quality work and knowing whether you're getting a good price or not.
It's a great way of, at first it felt really intimidating. I remember walking into that
Yeah.
store and talking like, I knew nothing. I mean, seriously, I knew nothing. I had never swung a hammer before. And all of a sudden I was going to go climb up on a roof, and this young guy who's going, but the truth is, once I learned it, that led to another component. Then we figured out how to do drywall work inside. If I would have showed you what I did for drywall work, Tony, it was a mess. It was Florida. It had these popcorn ceilings.
Yeah.
We drywalled the walls, but my drywall work was so bad. I took the popcorn guy. I had him spray the walls with popcorn. How's that popcorn? It had a popcorn wall, for the first couple of years of being there. And look, you're gonna mess up, but it's okay. That house produces $1,900 a month for almost 40 years. Right.
Yeah.
Think about that. I mean, that. I mean, that was really early on in my development of it. Now you got to imagine 35 years of today's $1,900 a month, and the same tenant's been in that house for over 20 years. Think about that. Right. So,
Yeah.
you can get into them. And that's what I encourage you. Look, like you talk about that house hacking, get together and figure out a way to, whatever it takes to get that first property, however messy it is, wherever it's at, find some way and get focused on that. So I think, let's talk, how do you get them focused? How do you get them looking for properties, driving around, finding places? How do you start to look and get them thinking about how do I get that first property under my belt?
Yeah. So first, I want to double back and touch on something you mentioned, which is so critical for the audience. So important. This is the big thing about real estate. Yes, we get cash flow from real estate, but while we're getting cash flow, from that rent also goes to pay the mortgage. You yourself aren't paying the mortgage. It's the tenant that's paying the mortgage, right? Third, on your taxes, each and every year, you get to depreciate that real estate and be able to lower your taxable income. Fourth, you get appreciation, right? As the years go by, that property, through inflation that's happened, that property becomes more and more expensive to buy, right? So you get these four things with real estate that I think are so impactful. I don't want to miss out on that, because that's a huge point to help folks get into real estate. So how do I help them get into real estate? So first, I share with them, focus on your local market. I have a lot of folks who say, gee, I live in Ohio or wherever, and Florida is really hot, or Austin is really hot. I share with them, focus on your local market. You are an expert, whether you realize it or not. If you live in Cincinnati, Ohio, Cincinnati, Ohio. I don't know Cincinnati, Ohio. I've been doing real estate for 20 years. I don't know Cincinnati, Ohio, like they may know Cincinnati, Ohio. So focus on your local market. You'll understand where to buy, where not to buy. You understand better the housing prices, the rental prices, and you have a better network there to create. One of the first things we teach folks is to build your real estate team. Right? Don't try to figure out how to do it all yourself. There's a great book by Dan Sullivan that we recommend. It's called Who Not How. Who Not How. If you haven't heard of it, Go to Amazon, go to Audible, go pick it up. It's a tremendous value, right? These are sort of things like you can pick up for like $10. Like, go buy the book, right? It's going to be so much value in your life. Who, not how. Build your real estate team. Don't try to figure out how to do your LLC or whether you should do an LLC or a trust. Go find a good real estate attorney that you can sit down in front of in your local market, who he also knows that local market, or she knows that local market, and build your real estate team, right? With your insurance company, right? Your insurance agent that knows that local market, who knows who the insurance companies are that are supporting it and the trends that are happening, right? I talked to my insurance guy, and he's like, yeah, they're pulling out of state. There's only 2 available in the state. Oh, okay. How do we figure this out? And he's very intimate because he's in the state. He knows, right? So build your real estate team. And also, as you build your real estate team and you're looking in your local market through your realtor, or maybe it's MLS to start off with, you also get to leverage that real estate team. So if you have 5 board of directors on your real estate team, right? 5 different individuals who are helping you set up your LLC, or your CPA is helping you, or your insurance, person is helping you. These are people that you can tap into and let them know, I'm looking to buy real estate. You think they come across people who are selling real estate in their day-to-day jobs as an
Absolutely.
insurance guy?
Absolutely.
Absolutely,
Yeah,
right?
yeah. If you're good to those people, they'll. Hey, I know a young guy. He likes, For me, I like the dirty deals, right? The ones that everybody else was afraid of. The ones I one of the ones with that first success with the one with the hole in the roof taught me. I want that deal, right? I mean, that was such a gift to know that I could take on a dirty deal that everybody else was afraid of. And go, yeah, I did fine. We went through it. There wasn't much risk. I mean, $900. I mean, really, that's your biggest risk at it. And
Yeah,
I could take that on and then find out that those tenants, they were the best tenants ever because they didn't expect much out of you. It was a low income neighborhood, or low to middle income neighborhood. And, the tenants weren't a pain in the ass. They were actually great tenants. And, sometimes something would break. I'd go, hey, how much do you think it costs to fix it? They go, oh, $300.
yeah,
I'm like, great. Here, how about if you fix it and I'll pay you for it? And,
yeah,
I had people that were actually kind of handy to help out. I think, that's where, as you start to build this network, first I encourage people, just like you're talking about, just take the house down. All this other stuff will come into place. Your real estate team, they'll teach
yeah,
you. Hey, look,
yeah,
as soon as you find it, make an offer and you think it's pretty good, go put an LLC together. It'll show you how to make an LLC. Today, I can put an LLC together and get a FICA number. I can literally get an
yeah,
LLC. Sometimes I'll even take down the website for it just because I like owning the website
yeah,
for it. I'll take the website, and do a FICA number all in one afternoon in under 2 hours, right? And I can do it myself. And every time we
yeah,
buy a new real estate, that's the second thing I do. First, I make an offer. I think if I get a nod that looks like it's a good one, and then I go take down, and it costs me altogether probably what my real estate attorney was costing me in the beginning. Now I still use a real estate attorney for bigger deals,
yeah,
but for the smaller little houses that I'm buying, I'm pretty good now at doing. I'll have them review my contract, and but the LLC, the online stuff to go in there to get the city or the state LLC
yeah,
done, and the FICA number, so I can charge it. Yeah, great. And now it's
yeah.
that's pretty easy to
Yeah,
set up.
your first one is always the hardest,
Yeah,
right? Just knock down that first one.
get it
Like
done.
you're saying, Anthony, just knock down that first one. Let me tell you, and everybody, right? This is not a Tony Lopes thing. This is not an Anthony thing. This is everybody in real estate says this. The first one is the hardest. After that, it becomes really easy. It does.
Yeah. So I think that's get out there. Now, how did you find your first real estate? How did you find your first deal?
So I stayed local in the same city where I was living. I stayed local. I knew, again, the same thing I teach. I knew the area. I knew what was happening. I knew the good sections, the bad sections, those sections that were developing and becoming better sections. So I stayed local. I used a real estate agent because I was working. I was working 40 hours a week. I didn't have a lot of time to be doing searches and whatnot. So I leveraged somebody else. I used the who, not the how, right? I found a who literally knew multifamilies. He was the guy, who would walk around with the keychain, and he probably had, I don't know, 200 keys on his key ring. He was called the multi guy, and he was the expert in the area. And that's how I knocked down my first deal. It was a quad. It wasn't the best, property. I'll be honest. You know what? I still own it today,
Yeah.
almost 20
No,
years later.
no, I just that first one I got was really a luck. We lived across the street, and the house had burned across the street, and I was trying to figure out what was happening with it. Found out that it was in foreclosure, and made an offer. Just literally made an offer. Someone said, "Here's how you make an offer." I called the bank, and they're like, "Look, here's how to do that," and we made an offer. Now I've had other ones where I spent, especially when I was young, in my early 20s, I would drive around on nights and weekends, and I would look around. The second one I made an offer on was a house that I drove. I lost that. I didn't get the house, but I drove this marketplace,
Mm.
and someone kept saying to me, "Find the crappiest house in the neighborhood, like find the worst one." And it wasn't even for sale. It wasn't even for sale. I walked up to the door, and this place was a jungle. It was a mess. And I knocked on the door, started talking to the woman, and I ended up talking through a couple things. And I'm like, "Hey, would you sell your house?" And literally, while I was talking to her, I could see the house in the back was a mess. I mean, like it was
Mm.
gross in there.
Yeah.
And she, over time, she kept talking to me. I went by the house a couple more times, and got to the point where she made a sale. Now, someone ends up, one of my friends, actually, one of my buddies, comes in and steals the house from me. But that's how it would start, as just driving neighborhoods, looking for the worst house in a decent neighborhood. I would try to find a neighborhood that I would live in, but maybe I'd want to move out of, grow from. So those low income houses were great, or neighborhoods I thought were going to transition over time. Maybe that
Yes.
would start this way now, but there was something, the other neighborhoods were heading that way. So I think driving neighborhoods, especially when you're young, you've got gas money, get in the car and just drive around looking for the worst house in a great in decent neighborhoods.
That's great advice, Anthony. That's great advice. Don't be buying houses in a neighborhood where when you go there at night, you're looking over your shoulder, seeing if somebody's following you. Those are not areas where you want to buy. Yeah, I'd
I
stick
tried
to
one of
those.
those. I tried
Yeah,
one of those.
yeah.
It was a foreclosure. I lost $5,000 in it. It was a foreclosure. It was an auction. It was in a bad neighborhood, and I went up to the door and literally I thought to myself, I'm going to get killed, and I gave
Yeah,
up
but
the
that's
five thousand.
that's price of education,
Yeah,
right?
yeah,
I
it
don't
cost me
take that
five
as a
grand.
failure, right? I don't take that as a
Yeah,
failure. I take that the price or the cost of an education. Now Now you're never going to do that again, right?
yeah. Foreclosed houses that have occupied tenants in a bad neighborhood was not something that was a smart move for me to go after. Getting that, I just it was too people. So there's people have a formula for that, but for me, I didn't figure that out yet, and I realized I just wasn't willing. First of all, I
Yeah.
didn't want to go drive in that neighborhood
Yeah.
for myself.
One thing I want to touch on, which we I think it's important to share with folks, and we're here. You and I are here not because we like to hear ourselves talk. We're here to add value. We're here to help people. We truly are. This is what we want to do. And so, one of the things I share with people who are just starting out, whatever level they're at, private money, right? If you don't have the capital to start, take a look at private lenders, right? Private equity. The reason why I should, some people shy away from it because they think, oh, they're hard money lenders, they're loan sharks, they're going to break my kneecaps if I don't pay. No, it's not like that. Hard money lenders, it's the hard money. They call it hard because that money is lent based on a hard asset, the home, the multifamily, the condo, right? That's the hard asset. So that's where hard money lender comes from. Now, these folks, even though you may pay an extra percent or two in the rate, in the interest rate for that loan, let me tell you, these folks are of tremendous value. Again, they have done many deals, so they know the market, they know what's happening with demographics, and they can be your best ally to review the numbers on that property and see whether it's a good deal or not. Because do you think they want to throw their money, their hard money, on a deal that's going to fail?
No,
Not at all.
no.
They want to put their money on a deal that's going to cash flow for you and them. because they don't want a dud. They want a good property. So again, for as far as value goes, the audience, the listeners, take a look at hard money lenders. Don't be afraid of them. They can be a really good ally if you need capital for your first property.
No, it's great. I mean, I talk to people all the time, and they ask me, "Hey, will you help me invest in a property?" And if it's a great deal, and I can see security, and I can make myself a decent percentage, for me, it's the same thing. I love finding great property deals that look, I can be there to support it, and I can control it. I love watching someone be successful, and I also make a buck doing it with them. And look, you're giving up a little bit to bring in a partner like me, but I'm also there to help you get the deal done. You're not going to have the deal if I don't come in. So I have some risk involved in a property, and at the same time, I'm going to protect that risk when I get involved with you. When I'm out there, we're going to go through and we're going to write this deal properly. We're going to make sure that we're keeping a cash flow. We're making sure we're making the investment so long term, both of us have something successful to operate from.
And how many years do you have in the business, Anthony?
It depends. Most of the time, I'll do under 5 years. Right?
No. How many years do you have in real estate?
No, look, I've been doing this, since I'm young. I'm a 55-year-old man. I get over 35 years in property development.
How do you put a price tag on that? To bring in somebody like a shark, right? We've all seen Shark Tank, right? To be able to bring in a shark into a deal who has that level of experience, that's huge.
It's an opportunity, and I feel like when I partner with somebody, their success is my success. And I love having, because they're a partner that's got a vested interest in it as well. So they're protecting my income, right? They're protecting my long-term assets. So together, it's a synergy between both of us.
Yeah. So for folks who are interested in house hacking, that's a great way to get started. And we also spoke about kind of like the next level. If you're already living in a home and with your family, and you want to go buy say a duplex or a quad or a 6-unit. That's, we already spoke about some things you can do to get into that level. But if you're listening to this and you're like, guys, I don't want to deal with tenants. I don't want to deal with contractors. I don't want to deal. I get it. Anthony gets it. We see this all the time. And that's why, there's a real estate vehicle that exists called syndication, right? That's Syndications right. are great from a perspective of, these syndicators raise money to buy a property that we otherwise wouldn't be able to afford on our own, right? When you go into a town or a city and you see a 200-unit apartment complex, chances are one person does not own that.
That's right.
Most likely that's a real estate syndication. One person isn't going to come in and plop down, $60 million on that one property. It's just not going to happen, or even $20 million, right? They pull together a syndication, maybe 5, 10, 20, 100 people, depending on how big the deal is. These syndicators pull a deal together with other investors who want to be in real estate, right? As limited partners, as people who don't need to deal with the tenant. They don't need to deal with the toilets backing up and the roofs leaking, right? The syndication, the general partners are dealing with that. And so the value you get through a syndication is, beyond the point that you don't have to deal with it, you're just an investor as a limited partner. Beyond that, you get general partners who have been in real estate for years and years and years.
That's right.
I'm in deals where combined, we have over 100 years of real estate experience. Yeah. If you're going at it for the first time and you don't know and you're scared, but you should be in real estate, to get involved with a syndication group that has over 100 years of experience, wow, that's huge. And I'm not looking to push people into syndication. I have clients who come to me, we do coaching and we go through this whole thing. And depending on what their why is, why they want to be in real estate, we help them anywhere from short-term rentals to buying a condo to buying a house hack types of. I'm not pushing people into syndication. I'm just offering them an alternative if they don't want to be the ones on the other end getting a phone call, having to deal with tenant problems, having to deal with contractor issues. Syndication is another route.
Well, it has you partner with a group. And so, look, for those people that are like, hey, I have no desire to go knock on a door. I have no desire to it's a great way to get into real estate. You're leveraging yourself over a group of people right? It gives you an opportunity to invest in real estate, which if you really believe in real estate the way I believe in real estate, look, I love having assets where I can touch the doorknob. I can
Yeah.
go paint the building. I can appreciate the value of a property by doing work. For me,
Mhm.
the manual part of working on a property, I can see the direct impact. From for years, I've tried to invest in the market, in the stock market, and other places, and it just never felt right to me.
Hmm.
Things change over there that I can't. I have no understanding of what makes those weird things change in a marketplace, and even my best investments over there feel like I'm gambling.
Yeah.
With real estate, I feel like I've invested in a property. I understand my risk assessment between
Mm.
where the marketplace is, but people are always renting. And I
Yeah.
know that I can go touch the asset. I can work on the asset. I can work on my relationship with the renter. And for me, that feels like a much more long-term secure. It may not be the biggest appreciation fast, but to your point, when I really start to work on those things, there are multiple places my property investments pay off. Now, maybe it's not just understanding that the asset goes up in cost, or that I've got a tenant who's paying my mortgage, or that I've got a
Mm.
deductible there. The combination of all of that, and you'll get to know that. Look
Yeah.
for you young people, or you people just getting started. Don't get all crazy about what you have to do. Just take down your first property. Just
Yep.
get to from here. The only thing you want to focus on right now is taking down your first property, and the next thing you'll learn is how to do it better and how to do it smarter. But
Yep.
don't put the cart before the horse. Your whole goal today is just taking down that first property. And if that means making your first investment in real estate through syndication, great idea. Now, ultimately, for you and I mean, let's talk a little bit of what are your goals when you're with your real estate? Why did you get involved with real estate, and what are you looking to achieve?
So when I talk about goals, I first actually take a step back and I talk about my intentions, right? I think intentions are the predecessor of goals. And so my intention was I wanted to achieve more freedom in my life, right?
Yeah.
I was out of college. I was working a 40-hour a week job, and that I eventually got laid off from. Here I was. I had a mechanical engineering degree, and I had a MBA degree, and I get laid off from my job, and I'm like, this kind of sucks. This wasn't part of the plan, right? I thought I was going to be employed and life would be good, but I got laid off. And so, I'm like, wow, I really don't have control of my freedom and the things I want to do. So my intention was get more freedom. And that's where it started. And then I said, how can I get more freedom? What do I want more freedom of? And for me, it was freedom of time. And so, how can I get away from my job? Well, I need to replace that income. And I said, oh, this real estate thing looks pretty sexy to me. Let me go take a look and start, buying some real estate. And so, really, my goal of getting into real estate was to satisfy my intention of greater freedom. And with greater freedom comes more time, more health, obviously more wealth, right? And so now I have, the privilege, right? As I share with folks, I live a very fairy tale life right now, right? I get to do what I want when I want because I want, right? I'm here with you, Anthony, because I so appreciate you and what you're doing to help the audience, help educate people, and share value with people. That's so huge, right? You got 35 years of experience, right? That's so huge to share with folks. So I appreciate you. And that's why I'm here, right? To share this message with the audience. So that was my intention of more freedom. My goal was to, acquire. I had my whole spreadsheet in Excel of how many properties I had to acquire. And my first year, I was going to do this one. And then, whether I had to wait a second year to do the next one, or in the third year, I had it all laid out, and I pretty much achieved that. I was very disciplined, and that's a very key word for folks, right, who are getting started. Discipline. Be very disciplined. If you're looking to take down your first property, be very disciplined. First thing on, in the day, pick up your phone. The apps, I didn't have apps back when I started.
No,
It was
none,
difficult to go through
none.
MLS. Now go through MLS, look
Yeah.
at what the latest listings are, and reach out to your realtor and say, let's get a showing on that property, or let's put an offer on that property right away. It looks great, right? Be disciplined with how you do things and stick to it. So
It's awesome. I always love the idea of, setting a goal for, look, I just want to replace my income. I love that idea, what you talk about, having the freedom to have a life that's mine and not dictated by my 9 to 5 or whatever. Just creating the freedom through that income. For me, I love the idea of having real estate today. I don't need the income today. Right today, I have my companies and the different companies I work on. I'm looking for my long-term stability, right? So I can take those assets that I've developed in the real estate world, and it gives me a way to, to reinvest that and continue to grow that, right? With my family as it grows, and all the things that happen there, I get the opportunity to really look at my
Yeah.
long-term requirement, my long-term needs as I start to enter the next phase of my life. And today I love growing different companies. Look, I'm having a fun time building the companies. But one day, as I start to slow down and I start to realize that I've got a stable income of my investments that I can now I can live off of them comfortably, right? And I've got preparation for that. So as you start to do that, Tony, I think that you've given us some great hacks on how to do that. If we want people to start to really get into have you as their coach, and I think you do an amazing job of coaching. They want to get Tony Lopes to come. Lopes, I'm sorry, Lopes. Sorry, Tony. To come and do their some training with them or their group or them as an individual. How do they find you?
So they can do two different things. They can go to my website, dirtybootscapital.com, or they can just simply send me an email. I look at all my emails first thing in the morning. My email address is Tony Lopes at dirtybootscapital.com. Tony Lopes, Lopes with an S, Tony Lopes at dirtybootscapital.com.
That's awesome. And we'll put all that down below. And audience, as always, look, if you love this conversation, if you have any input on it, how'd you get your first house? Tell me how you got your first property, or how'd you take that down? Tell Tony and I how you did that. And maybe we'll have you on the show as well. We're grateful for you listening. Thanks for the great ideas. Tony, as always, audience, thanks for being here. And if you could like and subscribe, it means the world to all of us. Thanks again.